Gino Live. How's everybody doing? We're going to hammer through these picks. That is a doji on the 10. Is it in the right sector? Did you find any bears that you like? So yeah, I'm gonna look at these. I'm gonna hammer through these really quick. And what we're looking for is a good sector that's outpacing the market, that's consumer defensive, right? And you guys like these pop-up hoverovers? They've been using this. Did you see this Marathon Bob? Have you seen this new little thing where you hover over a symbol and it pops up the thumbnail chart? There's the market. There's the sector. So you can see it's definitely outperforming, right? And here's some little, not ATFs or other funds that are holding it. So you can kind of double check everything it's in, how it's doing, right? So the only thing that's not going in favor with this is the market. So it's going against the market. It's definitely packaged foods. Packaged foods. Do we have a packaged foods ETF? Okay, so there's a trigger. We're looking for the doji in a strong sector. Why? Because if you look at the markets right now, the markets are down pretty decent, right? We got some pretty big moves to the downside. Definitely go look at the spiders because they were critical yesterday. But the whole purpose of Gino Live is we're going to look at these fast five picks. The software finds these picks so quickly. And you just have to decide if you like it. I call it a gray box. Not a black box, but a gray box, because it finds the picks, but you're the final deciding factor if you want to buy or short, go long or short. So in 5 minutes, you should be able to find a handful of picks. It's simple as hitting the screener, but you want to know what's behind that screener. So we're going to be using lessons on WSIO, Wall Street IO, and all these unbelievable tools that we've created to find the picks as fast as possible. But the thing is we want to understand why. We want to understand why those picks are good, why we like those. And that means understanding the system, So understanding the system is really, really critical. And that means what kind of system or techniques or rules are you using? Top-down approach, bottom fishing, breakouts, what are you using? So me personally, I like the Hawkish. If you're brand new and you're looking for something easy, like if you're going to teach your family, a friend, a kid, whatever, your partner, whatever, if you're going to teach somebody, start them off with a simple system. The Hawkish MACD, the only hard part about it is if somebody's already learned regular candles, it kind of makes it harder because you got to unlearn. When I met a gentleman named Robert Kiyosaki, who wrote Rich Dad, Poor Dad, he taught me something very interesting. He said, yeah, well, unfortunately, you're learning from me a little late in life. And I said, what do you mean? He goes, well, it's harder to learn the smarter you get. And I go, why is that? And he goes, because as you get older, you fall into a daily routine. Does anybody find themselves falling into a daily routine? You wake up, you do this, you do that. Well, when somebody tries to show you a better routine, you got to adapt to that one or try to decide which one's better. Well, as you get older and you start getting comfortable, you get set in your ways. If you want to learn something new, it's hard because it's trying to teach an old dog a new trick is where it comes from. So thing is when you learned a lot of systems that didn't work and then you come over here, you got to go, wait a minute, that's not what I was told. What do you mean 1 ATR? What do you mean RSI? What do you mean MACD? I thought this was better. So you got to kind of like let go and try something different. So brand new people that know nothing learn faster. So can you unlearn? Can you relearn? Can you accept and adapt quickly? That's what it's all about. So Hawkish, the hardest part really is this: understanding the difference between regular candles and Hawkish candles. Kevin had asked, have I always used Hawkish? Actually, the first time I heard the word Hawkish was from Micah back in like 2011, I believe it was. So I taught him back in 2009 and he goes, hey, I'm looking for a better like candle chart system. I came across this Hawkish thing and I said, wow, yeah, have fun with that because I was confused on how it worked. He showed me. And then later on, years later, I started watching how he matched up with the MACD. And then he actually put together this back testing tool right here. And he started back testing Heiken Ashi right here. Just putting in the Heiken Ashi. That's your buy signal, right? So there's my buy signal. Here's my sell signal. And if you go like this, you can see it. Here's Heiken Ashi equals green candle. So it doesn't start counting until it turns green, right? And MACD crosses above. And he started testing certain stocks and saying, how does this work? And started putting things in there. And he got the stats. And see how this works? Not a good annual return, but look at the batting average and look at the risk reward. I just randomly clicked on, And if you add another sell signal, let's make sure the MACD, and usually it jumps in there and says, and then you start getting, different stocks in here. And let me just put the diamonds in here. This is not real good. But just as an idea, and he did it with Apple. He did it with Apple because he was looking for one way just to trade Apple. And when he did that, just using the Heiken Ashi, he started back testing and realizing, hey, this system works. This system works. And I don't know why it's saying risk reward 100%. Let me go. There we go, right there. I'm 10 years. See, 20 years. I'm back testing 20 years. So what do we got? 26% annual return. 80. Is that a good batting average? 87%, yes or no? Can you please try to find one bigger than that? 2-to-1. So just using the payday cycle, going long for the last 20 years, here's your annual return, here's your batting average, 2-to-1. When you make money, you make 25%. When you lose money, you lose that. Pretty good. He said, so he said, you know what, I think I found something. And by the way, on the weekly, sometimes it's even better. Look at 60% batting average, but 6-to-1. I actually like the weekly. But you barely get 20, you don't even get one trade a year, right? So me personally, I like to confirm and wait for candle number 2 because candle number 1 doji I need to break above that, right? So real quickly, let's hammer through the markets because FOMC is coming out. Spiders, what do you guys think? Going back to the daily, are we bullish? Are we bearish on the daily? That's an expanding candle. When I go back to regular candles, do you see how it's a big, solid red candle? Gonna have to put you bearish. Now let's jump to equal weighted. Equal weighted looks good. Still looks good, doesn't it? So this is a huge difference between spiders and equal weighted. So what does this tell me? There's definitely some sectors and definitely some mega caps that are hurting the market. Let's go to diamonds. On the diamonds, I'm going to call that no trend. What do you guys think? Because the MACD's down here and we're dancing on the 20. I don't see a trend. We got a lot of support here. The diamond's just no trend. What about the equal weighted? Big difference. Big difference. Do you guys see that? Gap up on equal weighted. And somebody's helping the diamonds today. So you see how that's neutral? And that one is bullish. So far I'm going, okay, we got red, nothing. And I already know this is red. We got green and green here. So the equal weighted, this is a hard market. So is the market bullish or bearish? Well, which one are you talking about? The market cap or the equal weighted? Now, has everybody seen how interesting this is already? Okay, the Qs. Okay, is that easy to say yes or no? Are you one of those few people that say this is when you buy because we're dipping? No. Look at this. Regular candle. We're expanding. We're way far away from the moving average. But do you see the expansion on these candles? Small candle, big candle, big candle, big candle, big candle. We're heading down to here. Throw your Fibonacci's on there. We're heading down to the 50% line, right? So that's an easy call bearish. Do you think the equal weighted could do the opposite? And no. It's bearish, but not as bad. So does everybody see the power of looking at equal weighted? Broad participation. So this is what's interesting here. That is bearish. That is bearish. That is by far bearish. Why? Dead cat bounce, big sell-off, hitting his head. Thank you, Amazon. A lot of resistance right there. That's where I'm looking for a kiss of death. But when you go into the fundamentals, why does it say broad participation bullish? Because it's looking at the equal weighted. Energy. How's energy doing? This is exactly what we wanted to see on the chart. Not on the war, but on the chart. We wanted to see it touch the 20 and turn back to green. When you go to regular candles, it triggered. Why? Because there were some, what I read, I got to double check it, is there were some surprise attacks on some American bases or American troops. And our administration said, you know what? You can't do that. You're going to get bombed again. And we're going to go back to bombing you. So there was a spike in oil prices. And funny how it timed it right when we hit the 20. See that? Oil tried to break the 20. We got a little truce talk, some peace. Let's all settle down. And back to war. Funny how this just happened to be a coincidence on the 20. Makes me wonder, is somebody playing the charts? Okay, so there we go. Right on the 20. Right on the 20. That is a play. This is when you want to scan for bulls right here in energy. Do we have any? One bullish setup. EXE. How are we doing, EXE? Earnings is over. Beautiful. Right there. That's my trigger. Coming off a bottom. Could you naked put this? Probably, because it's not bullish enough yet. We're hoping for an expansion candle to the upside. How'd you do on earnings? Beautiful. You beat earnings. And you can go look at the fundamentals of that. I was hoping there's more, but number one sector to be in right now, energy. Number two, financials. Did you catch that? Number one. Industrials. Ooh, I was going to say number three, but nope. Industrials. What happened here? Something tells me somebody had earnings and said, uh-oh, right? Was it one of these big guys? Was it Caterpillar? Yeah, Caterpillar accentuating to the downside. Was it GE? GE's a nothing burger. RTX looking good. GEV. Yeah, GEV's. And GE. Well, GEV's looking worse. You're not, okay, we're not looking at the railroad. That's a good setup. Let's see if that doji's tomorrow. So somebody in here is not looking good. So if it's earnings and it's a couple big players, when I go to equal weighted here, nope, it's more than one because equal weighted is going to take it up. That's more than one. It did not break out. So I have two. I have the daily and the bullish. The daily and the weekly, both bullish. Maybe I want the RSI above 50, but I want to make sure that it's definitely stronger than the SPY. Or, see the sector down here? I could do two. See, that says 1 and 2. I'm using 2 of 2 here. Maybe I want, let me just shut this so you can see it. I want the sector MACD daily bullish and the weekly. So there's definitely confirming on both trends, daily and right. The RSI, the sector is above 50 now in the weekly. But what about this? What if I have the sector RSI above 50 and it's out both of stronger? So it's above 50. So if the S&P is above 50, it's above the S&P also. So what that means is this. Let's say the S&P is at 60. I want the sector to be above 50 and above the SPY, which is 60. Right? And that'll give you your picks. So knowing what you want in here is everything, right? Do you need the daily MACD on this one? No. And now I got 29 picks. But you know what's not signaled now. So the more you put in here, maybe put them all. Put them all in there. Moving average cross. What's the moving average cross? They're going, the 50 is above the 200. Not today, but I don't know, in the last 30 days. There we go. We got Hormel and Kimberly. So you can get really, really jiggy with it. And like, what do I put them all in there and see if you have anything in there you probably won't. How about ATR? I'm going to get rid of this one. The daily ATR, do you want low volume? Do you like this one? This is new. I like mine between 1.5 and 3. What if you use a stop loss of 4%? This is perfect. What if you use a stop loss of 5%? This is perfect because these will stay under 5. If you use a stop loss of 5%, this isn't going to work. Does that make sense? And now I can pick the ones, because I don't want these guys. Do you want these guys if you're looking for a home run? No.